Jason. He's joining us as the chief tech advocate from Starling Bank. So thanks for joining us today, Jason.
It's my pleasure. Thank you for having me.
Great. So before we jump into things, so I know I want to kind of get a background on how you ended up at Starling Bank. I know it was started in 2014, and then I would actually ask the audience what percentage of people use the account or for other personal business, but in today's setting, I won't. But I'd really like to hear how it reached top bank in the UK in 2018, 2019, and now has 1 million customers. But before we jump into the scaling, tell me about how you ended up there.
Sure. So I ended up at Starling Bank. I was working at a consultancy firm that served traditional banks and other more traditional tech companies, and I met up with the person who was then the CTO of Starling, and we had a conversation about this, and this somewhat crazy idea about building a bank from scratch came up. And it sounded intriguing, so I decided to, jump ship, go over, and I initially started out at Starling Bank as a senior engineer, and I joined before Starling Bank was public, so there wasn't a full bank there yet. We didn't have a full banking license at that time or anything like that. There was, all of the customers of the bank. There were about less than 100 customers, and all of them were employees of the bank. So it was very small. And when I first walked in, the first thing I was asked is, "We do not have a direct debit system. Please, could you write one?" So that's the level that we were at that time. And then as I went on, I started over the years doing more and more speaking things, going out and talking about the technology behind the bank and how that works. And so gradually I've moved over from the sort of engineering role into a more speaking role, which is why I am now the chief technology advocate. So that's the sort of brief synopsis of the journey I've been on.
Yeah. So when you joined, what was you told us a little bit about what Starling was like in the early days, but I'd love to hear a bit more about that. Like, how large was the team? How large was the engineering team that you were working with?
Yeah, sure. So when I joined, I was employee number 64. So even when you're running a bank, even a startup bank has to be reasonably big and reasonably well capitalized. So we're not talking the sort of like stereotypical startup of 4 people, working in a garage somewhere. Even your sort of lowest level startup bank still has to have quite a lot of infrastructure and resource around it. The engineering contingent of that was about, I'd say, a dozen to 20 people, something in that region. So there was quite a large proportion of the people were working in technology, because the bank was very technology focused from the very beginning. And a lot of what we were doing back at the start was very, very basic stuff. So can we make a payment from one bank account to another? Can we set up a direct debit? Can we have a card, that can make payments and that sort of thing? So all of that was the very basic stuff that we needed to set up to connect to the rails and provide what was the minimum requirements for a bank account. But once we provided that, we very quickly started moving on to things that were not minimum, as it were, things that were very new and so on. I guess one of the first brand new things we worked on was entirely online application, because we're an online bank, so we had no branches. The only way we could get new customers was by getting them to sign up online. So we had to do that right from the very beginning.
This might be a silly question, but it seems like such a, from a customer's perspective, having a bank be online is so much easier. So why didn't a lot of high street banks integrate that technology several years ago?
Sure. I guess it's because they didn't need to. There was nothing driving them to. the traditional incumbent banks, um, the way they competed for customers in two ways, really. One way was on what I'll call the financial costs and benefits of doing banking.
Mhm.
So this is things like how much interest do I get paid on my deposit? How much do you charge me for getting an overdraft? What financial rewards do you give me for using a credit card, et cetera, et cetera. So all of that sort of stuff. And then the other way they competed was on customer service. So what that meant was that unless one bank started offering a substantially better rate for your deposits, or unless you had a really bad experience with customer service at another bank, there was no reason to switch. Like, no one would come along and say, well, I'm going to switch to, from Lloyd's to HSBC, say, because HSBC has a better online banking system. No one said that. That was virtually unheard of. And because no one was thinking about that, they didn't try and compete in that manner. So, banks had online systems because everything was going online, but they were fairly basic, and no one was bothering to try and, compete on that basis and so on. And then Starling came along and other online institutions, and we started offering competition with what you could do with your bank account. So we said, hey, come to Starling Bank, not only because we offer good deposit rates and have good customer service or whatever, but because we also offer you the ability to freeze your card rather than cancel it if you think you've lost it. So you can freeze it, and then if you find it again, you can unfreeze it. And now suddenly banks are running around going, oh, we need to, freeze cards and that sort of thing. So I think that when Starling came along, we opened up this idea that you could compete on what your bank account could do for you, not just on, how much money it gave you. So yeah, that sort of move has encouraged banks to think about their online offering and how they can improve it.
I've definitely used that freeze unfreeze feature more times than I care to admit.
Yeah, absolutely.
So on that mission, was that the initial mission of Starling Bank that drew you to the company, and have you seen it change over the years?
Sure. So I think that the original mission statement for Starling Bank is to make banking better. So that was the original idea behind it. So Starling Bank was formed by Anne Boden in 2014 at a time where banking was ill-regarded by the public. We'd just come through the financial crisis and were, still in the sort of after effects of that, with the, downturn that had come after the banking crisis. And basically the public's general attitude to banks is, well, all of these banks, they went out and they, played with our money, they, risked the economy, and then they got bailed out, and now we have to pay for it. This is unfair. Mm-hmm. And so banking was regarded as, a sort of, as a profession that didn't really care about the public. And there was some exaggeration to that, but in a lot of ways that was true. And so Starling, along with other institutions, came along and said, well, let's fix that. Let's create banks that actually focus on the customer and how the customers, and try and connect with the customer and provide the customer with the ability to live a good financial life, healthy financial life, give them the tools to do that. And I would say that mission really hasn't changed since we launched in 2017. We've still had the same mission. It's expanded a bit. So rather than just saying, let's help consumers have a healthy financial life, we've now moved on and said, how can we help businesses have a healthy financial life? So we've expanded the reach of our mission to businesses as well as consumers. But in general, it's the same thing. It's, us providing tools to help people live well. The latest one of which is very COVID-19 topical, which is the connected cards feature and spending spaces feature, where you can create a small pocket of money which has a specific card limit linked to it. So you can give that card to someone who can go out and do shopping, for example, on your behalf. But that card can only spend from that particular space. So it can't access, all of your funds. It can only access the funds that you put into the space for it. So that can really help with people who are stuck at home because they're, immunocompromised, or for whatever reason they can't leave the house. They can give a card to someone else and know that that person then can't, go off and run off with all their money. They can only spend, what is in the space for them.
Yeah, that's quite interesting. When did you launch that? Was that specifically for the current crisis?
Well, it was something that so this is one of the interesting features of Starling and our technology and how it works, is that we've designed it to be very flexible. So this was something that we were sort of had an idea in the back of our mind that we could do, having a card linked to a specific pot of money in the account and so on. But it was sort of on the back burner because it wasn't that much of a priority for us. And then COVID-19 came along and we said, oh, this could really help out with, people trapped at home with COVID-19. Let's focus on it. So we switched focus and we put effort into it. So it was there in the background as a thing that was, sort of ongoing. But when COVID came along, we really put a lot of effort into it and then, launched it out to the public far faster than we otherwise would have.
So I'm gonna ask you a few questions about kind of the tech and the scaling side of things. So
sure.
Starling obviously is now a well-known name in the London ecosystem anyway, amongst the early stage startup community, and a business that people actually look up to because of how quickly you scaled and how you scaled and all that kind of stuff. So asking from an early stage startup perspective, you mentioned earlier that when you first were working on the project, you had 60 customers and they were employees of the company. Yeah. And within about 6 or 7 months, you moved from 60 customers to 250,000 customers, which is a huge growth. And we want to talk about that from a tech perspective, but also from a business perspective. So when you were approaching it and you had 60 customers, did you know at that point that you were going to scale to that size?
We hoped that we were going to scale to that size.
Yeah.
And, we've beaten our growth expectations. We had initial plans of how quickly we would grow and we've beaten those, which is really good. But we certainly stepped into this thinking, we want to be not a high street bank, but, of the scale of a high street bank eventually. That's where we plan to go. Yeah.
And was there a lot of kind of pivoting involved in the product as you were going live and getting customer feedback? And did their spending habits kind of influence what you were building on the product, or was it quite smooth in terms of what you envisaged for the product and then what happened over the next year, 6 months?
So there was a lot of pivoting. I will say that. So we it was more, the pivoting wasn't so much about getting customer feedback. So the danger always with getting customer feedback is the famous quote that Henry Ford didn't say, which is if I'd asked people what they wanted, all they would have gotten is a faster horse. So it's that sort of problem of, if all you rely on is customer feedback, then you just get what the customers can imagine. And we wanted to give customers something that they needed but didn't imagine, basically couldn't conceive of. So that's what we did with Starling. So a lot of the pivoting was not based around a customer saying I'd like this or I'd like that, but was based on us saying, hey, we see a set of problems here. We see that customers are having problems in this area, and it turns out that because of the way we've built our technology, we can solve that problem. Quick, let's solve that problem. And jump in. A lot of the problems were also came about through other fintech firms announcing things, announcing products, and us. So one of the funny examples was Monzo announced that they were providing a gambling block feature to block people from spending money at gambling institutions. And we saw that and went, oh, how do they, that's interesting. How do they do that? And then we, looked it up, did a bit of research and a bit of thinking and going, oh, they must be doing this. Well, let's implement that then. That's quite quick. And we went away and implemented it and launched it before they did. Because, and this is a the thing that you can do when you have versatile and flexible technology is
Yeah.
you can suddenly spot an opportunity, like we did with spending spaces in COVID-19. You can jump in and go, let's launch this thing here now. And so it's more about seeing opportunities, seeing problems that you can solve, and jumping in and solving those problems.
Yeah, and when it comes to the team, so you've got a tech team, and you've got all of these features and these new things that you're getting out to the market really quickly and at fast pace. You've talked about the fact that you don't use design sprints with the team, and you're able to move quite quickly. How exactly do you manage the team and get them to get that work done quickly? Do you have any advice for startups on that?
So I would say for what you're always aiming at is you're aiming at getting a minimum viable product out quickly. So rather than trying to sit down and plan things out and so on, and say, let's do this, just sit down and release something, write something, create a prototype, release it out, and see if it works, see if people like it, see if they're using it, see if it's actually solving the problem that you think it's solving, and then decide whether to put more effort into it, and put more stuff out. And this is the sort of agile principle of, you should prefer working software over comprehensive documentation. So it's better to have, a prototype out there being used than it is to have a stack of documents saying what a fully fledged product would look like, and that sort of thing. So the reason we don't use sprints is because ultimately sprints is just a way of organizing your work so that you can to encourage you to do these quick release check. Do we need to, change and so on? Where do we need to shift focus to? Okay, we need to shift focus to here, move on, check again, and so on. And if you get into the habit of having these checkpoints regularly anyway, you don't really need the sprint to force you to do that. But sprints are a very good way of sort of getting you into the habit of doing that at the start. But then you can eventually take the training wheels off and go, well, we don't really need this anymore.
I guess one of the questions when it comes to the team and when they're just building stuff and getting things out so quickly, because the industry is quite regulated, do the engineers have to be quite aware of what the limitations are in terms of regulation, so that they're not building something and putting it out that's against regulation? Or like, does it complicate anything when it comes to the actual engineering?
A little. It's not really. So the FCA is quite good at taking, and the other banking regulators are quite good in the sense that one of the things they realized from the financial crisis is that the problem with the regulation is it was very tick box heavy. So they kept getting, when they were trying to work out why the financial crisis had gone wrong, they kept asking, why it had happened. They kept asking banks, what about this? What about this? What about this? How did you let this happen? And the banks kept coming back and saying, well, we followed this regulation, and all these procedures were signed off by the FCA. And, we've got this tick sheet to show that we followed the 26 points. And so therefore we can't be at fault. And, the FCA realized that what had gone wrong is that the banks had basically just had tried to take the approach of going, if we've got a tick box set of regulations, then we can't be doing anything wrong, even if what they're doing was actually definitely wrong. So the FCA moved on to a much more what should I call it, attitude-based scenario of where they're going, well, what is your attitude? What are you doing? When you're doing this, what is your are you trying to help the customer out, or are you trying to scam them out of money? What is your reasoning behind this? And they put this regulation on this emphasis on the banks being much more being able to justify what they were doing in terms of focus on the customer, rather than in terms of we've got our 26 tick points that we've fulfilled. So in terms of engineers, as long as engineers are focusing on the correct things, as long as they are serving the customer correctly, and as long as they are, abiding by the spirit of the regulations, that's the most important thing. And so they don't need to learn, 26 or 27 different points. And where there are definitive, no, you must do things in this manner regulations, we try and automate those so that engineers don't have to think about them because they are in the automated, way of doing things.
Yeah, cool. How many engineers are there now?
About 120, 130, that sort of number.
Cool.
Yeah.
And one other question is around kind of third-party suppliers. So are you working with third-party suppliers to add to your product?
A bit. Yeah, somewhat. We are a bit of a nightmare for third-party suppliers, or at least traditional third-party suppliers for the banking industry.
Yeah.
And the reason is because we want to... Traditional third-party suppliers are used to coming into a bank and running a large, long-running project to install a piece of software that will then be left there for ages and, gradually and improved over time.
Yeah.
We are very much about improved over time in sort of bursts that the company then pays for. Yeah. We are very much, we want to pay for a product that's going to be continuously updated, and we want to pay for usage, and we want to be able to connect and disconnect very easily. Much like a sort of a consumer would do on a product that they sign up for online.
Yeah.
And a sort of subscription model. And many companies companies that supply banking tech aren't set up for this. Yeah. So they come along and go, we can help you with this. And we're like going, no, you can't.
Yeah.
In fact, I think we could, we as a bank could provide a better service than you are providing to your other customers.
Yeah.
So we're a bit of a nightmare. There are some third-party suppliers that we work with a lot, but those tend to be the big tech players that other, banks work with a lot. So that other, tech companies work with a lot. So we work with Amazon a lot, for example, to have cloud hosting. We work with Slack and so on and so on. So these are, in terms of third-party suppliers, we don't have many.
Yeah. Okay. Cool.
On the topic of kind of the agility of your tech features and your ability to implement it quickly, I'd love to know how your culture plays a role in it. Mm-hmm. And one thing I wanted to hear was, you said when you joined, you were employee, I think number 64, and mm-hmm. obviously now the team is much larger than that.
Yeah.
So was there a point in that time that you kind of noticed there was a culture shift, or do you feel like it's maintained its initial vibe?
So there's definitely been lots of culture shifts. Because we've grown so quickly, it's very hard to put my finger on one point and go, at this point, this is the inflection point where things change. Mm-hmm. So I was employee number 64, and now we've got over 1,000 employees, or round about 1,000 employees. I think it's in that ballpark. So I guess one of the sort of how the main points of culture that we've kept are the ability for anyone to go and talk to anyone else without having to go through a flow chart of managers to work out how they can talk to someone else. So I can just walk up to someone in payment operations and talk to them without needing for me to go to my manager, to go to the operations manager, to go to someone else, to go to et cetera, et cetera. So it's very open company. Anyone can go and walk around and talk to anyone else about what's going on, and can, get that sort of feel for, feel for what needs to be done without, having to walk through the tree. And I think that's very important to keep that. Mm-hmm. We've also kept an attitude of everything has to be very flexible and rampantly pragmatic. That's how we describe it. So everything has to be very, why are we doing this now? Not just why are we doing this, because something might be a good idea, but is it a good idea right now? Is it the best thing we could be doing right now? And constantly asking yourself that question of, is this the thing that is best serving our objectives straight away? So keeping that in mind is also very important for what we've been doing.
How do you measure that? How do you, what sort of tools and what sort of logic do you use to decide what your priorities are?
Yeah, I think there's no quantitative thing, so I can't point and say, oh, it's, you know, we use such and such a metric. It's basically just by having conversations all the time and saying, you know, talking to people and saying, is this the right thing that we could be doing, you know, right now? Is it the best thing, or should we put our effort elsewhere? And asking that question deliberately, and, you know, sitting down with a group of people and saying, well, is this the most important thing? That's the sort of thing that we do. And, you know, oftentimes we get that right and sometimes we get it wrong, and that's fine. You know, we just have to accept that sometimes we'll put our efforts somewhere where, you know, we rarely do things that are pointless, but putting our efforts somewhere where there was actually a better option. And, you know, just talking about those things in a constant, having those honest reflections. The problem a lot I find with the sort of, you know, metrics and, you know, key performance indicators or whatever, or, you know, whatever sort of tool that you come up with, is ultimately they are they very easily turn into an arse covering exercise. So when someone comes along and says, why did you do, you know, task B rather than task A, you can hold up a piece of paper and use it to defend yourself and say, but the piece of paper, you know, it's the same problem that the banks had in the financial crisis. The piece of paper says that we did the right thing, you know, and the piece of paper is, all of these things are subjective. Right, so this piece of paper is not going to be an objective measure. Nothing is an objective measure of whether you've done the right thing or not. It's just a subjective measure, but because it has the appearance of objectivity, you can hold it up and say, oh no, defense, you can't criticize me because I've got this. And really, you have to be open to having these honest, difficult conversations of going, was that really the right thing to do? You know, is this really the right thing to do? And sometimes those conversations are hard. And, you know, you have to be open to having those hard conversations. You know, doing it, it often appears that the sort of, you know, with doing things without this framework is a bit sort of la-di-da. It's a bit, oh, you know, it's all nice and fluffy and so on. And you're not really having these hard, objective conversations. And no, really, we're doing things the hard way. You know, having to force yourself to have these honest conversations about subjective things where you know, the right answer isn't immediately obvious is harder than having this defensive piece of paper that you can hide behind.
That's interesting. It's like that, you know, the classic phrase, you get what you get whatever you incentivize.
Yeah.
That sounds like
whatever you measure gets better. Yeah, absolutely.
Yeah. I'd love to hear how your role at the company changed and how you felt, you know, it was time for your position to evolve a bit.
Yeah, absolutely. So I guess it was because we realized that a lot of we gradually realized that a lot of the technology at Starling, a lot of the technology behind Starling Bank can appear very opaque. And with an incumbent bank, the technology is opaque as well. But for the customers, they have a building that they can go to and a person that they can talk to. So for them, the fact that there is this opaque technology isn't as bad because they can walk into a bank branch. Or nowadays, as I see outside my window on the high street, queue for hours to get into a bank branch. But so because of that, the fact that the technology can be opaque isn't really much of a problem. But for us, the fact that technology is opaque is a problem because customers will go, well, you know, how do I know where my money is or what's going on? And, you know, this sort of thing breeds mistrust, and that's fatal for a bank. We need to have trust in our technology. So we realized we needed to have someone going around and talking to people about technology and about how the bank worked to engender trust in it. The reason it was me is because I started doing this talking. I'd done talking before, you know, public speaking in a non-professional context, and I was quite good at it and so on. So I transitioned into that role and started doing more and more of those things. I have to do some coding still, some software engineering as well, just to
Mhm.
keep my oar in and make sure that I can stay connected with the technology so I can genuinely talk about it.
Mhm.
But I guess that, that gradually happened over time until it started off as just one or two things and then gradually evolved into my whole job, basically.
That's interesting.
Mm.
You don't see that as much at the other disruptor banks. So I say, like, they don't, they have their CEO, but not so much like a public facing person who's there to, kind of describe the tech changes. And it's interesting too that you come from the tech background versus having like a PR advocate for the company. I think it seems a bit
Sure.
more realistic.
Yeah, I mean, we have advocates as well, in the sense of people who go out and talk to businesses about why Starling is a good business bank account. They don't come from a technical background, but we felt it was important to have at least one person whose job it was to go out and explain the technology and the technology philosophy behind the bank.
Makes sense. Um, uh, on the same way that your role changed and evolved, I was reading a bit too about how that's very consistent with other people's experience at Starling too, about how a lot of employees have kind of changed with the company and how their position has varied a lot.
Yeah.
So how has like Starling kind of managed to maintain this agility with the employees, as especially now that you have 1,000 plus people?
Sure. So I guess it's, again, embedding this rampant pragmatism idea, and this idea that it's not only, rampant when you come to this idea of going, we need to do what's right now and be able to change and shift and so on, and say, what is the priority right now? It might be different to what the priority was yesterday. That also applies to the employees to a certain extent. So, if an employee comes along and says, well, I'm doing this job, and it turns out that job isn't as useful as it once was. It could have been useful before, but now it's not as useful. They need to be able to move into a new role and so on, and keep the knowledge that they've gained about Starling and about how we work and that sort of thing, but move into a new role where they will be able to better serve what we're trying to do for customers, better serve the needs of the company and the customers in that way. So we've got to be flexible enough to allow people to change not only exactly what they're doing, but also to completely change departments. Like, we had someone who came along as an intern in payment operations, and who is now retrained as an engineer. We retrained them as an engineer, and they moved over and became a software engineer. So entirely changing departments is possible and necessary. And I think embedding that culture right at the start and carrying that through of, we do what is right now, is important. And one way to maintain that is, you don't just switch around the roles and the jobs of the people at the sort of the starter, the entry level, people who are still finding what they want to do in their career and are moving around and trying different things. You also do it all the way through the organization, right up to the executive. So we've had, like, members of our executive group who have been doing one job and then have moved over and started doing something completely different, because that is what is required by the organization. So that is important too. And if you have that throughout the organization of people, moving around and doing different things, and you keep doing that, then that maintains this sort of internal flexibility to move people from one place to the other as necessary.
Should we talk a little bit about your competition? I mean, you've been
Sure.
You've been quite transparent about them already in terms of the traditional high street banks, and mentioned the names of Challenger Bank and that kind of stuff, and kind of talked a bit more about how what they're building might have influenced what you've been building, and how you've put it out. But I guess everybody will know the names of the Challenger banks and the unicorn Challenger banks that are around at the moment. They also know the names of the high street banks. What are you doing to kind of stand out from them? And I guess you can answer in as far as in comparison to high street and in comparison to Challenger.
Sure. So I'll answer the answer to in comparison to Challenger.
Yeah.
That's trickier.
Yeah.
So I'll leave that one, actually. I'll start with the high street because that's easier. Okay, so starting with the high street, what we're doing to stand out from them is reasonably obvious in that we have, I mentioned this before, we've opened up things that you can do with your bank account, features as a way of competing with them.
Yeah.
So we've come along and we've said, hey, guess what? You can open an account in 5 minutes. And they've gone, oh, and the incumbent banks have panicked.
Yeah.
And so on, and said, oh, we can't do that because you need to fill in a form and then book a appointment in branch and then come into the branch with a load of documentation and so that's and then we've said, oh, we've launched card freezing, and then a few of them, like months, years later, said, oh, we've launched card freezing too, and we've got, okay, well, we've launched another 5 features while you've been doing that. Can you keep up? So we're competing by launching a bank account that can bring the power of automation to you, the power of the companies have to automate their processes and so on. We've brought that to the consumer and to the business, to small and medium businesses, and we've said you can have this power of automation too, so you don't need to spend goodness knows how long organizing your accounts or organizing your receipts or what have you. We'll do that for you and give you that automated power so that you can go and do your own thing. So that's how we're competing with them, and we're doing very well at that.
Yeah.
How we're competing with other challenger banks is more subtle, because obviously a lot of the feature set and feature competition and so on is very similar between the two of us. What we're starting to see is, so we're starting to focus more on connecting with businesses and providing businesses great opportunity. We're also starting to ask the question, how do we make money? And how do we become a long-term, stable, viable proposition? It's very easy when you're a startup to go, growth is the important thing. Growth. That's all we care about, is just getting more and more people signed up and through the door. And if you are losing money on each of your customers, then growth is actually accelerating your decline, not accelerating your ability to survive as a business. So at some point you have to pivot and ask yourself, how do we actually make money? And if the answer is then you get into the problem that WeWork did and that Uber did, of going, we're this massive business now, it turns out that we can't actually turn a profit. That's a big problem. So I think we have started asking ourselves the question, okay, no, how do we actually make money? How do we become a stable, long-term, viable proposition? That is the important thing. And not just to, satisfy our investors and so give them a return, but also to say to customers, we're going to be here for the long term. You can trust us, and to say that to not only customers, but regulators as well, and say, we're not a here today, gone tomorrow organization. We are going to be here for the long term. And that, I think, is something that lots of challenger banks are starting to ask themselves. And we hope that we have come up with a good answer for that. And we hope to be profitable this year. Now, that hope appeared before COVID-19. So who knows if that actually will still be a thing, given the state of the economy and so on. But that was, certainly our plan still is to become a profitable enterprise.
I mean, I guess one of the things that you're competing with some of the traditional high street banks is a trust-based thing, which is what you kind of mentioned before. So people trust the banks, the high street banks, because they've been around for a long time and because you can go in and speak to someone, et cetera, et cetera, et cetera.
Well, to a certain extent, yes, and to a certain extent, no. This is very interesting. What we're seeing, what I'm anecdotally seeing more and more of as I go and talk around people, is the multi-banked approach. So people will have multiple bank accounts. So they will have their high street bank account, and what they will do is they will pay their money, their salary or their large chunks of money into their high street bank account, and they will pay out a few important bills out of that, like their mortgage and so on. And then they will transfer every month a load of money over to their digital bank account,
Yeah.
like their Starling or what have you, and they will do all of their spending on that bank account.
Yeah.
And the reason they will do that is because they trust the high street bank with their money, because there's still this idea that there's a building and my money's contained in that building.
Yeah.
It's not. Your money isn't in that building. It's online, like all of the rest of the money. But, because there's a building there, it, it still speaks to something in our brain of going, oh, there's some gold in the vault that, I could theoretically go and get. But when it comes to their data, their financial data and how they, interact with that and what their spending is, that is where they trust the digital banks, because the digital banks are much better when it comes to data processing and giving them access to, what am I doing with my spending? What is the aggregate amount I'm spending? Can you give me a notification every time I spend, et cetera, et cetera? What are my regular payments? All of that is much easier to access through their digital bank.
Yeah.
So the trust has become split between the money and the data.
I completely agree with that, because that's what I do. And I think one thing that we haven't mentioned, which is what loads of people are saying to me, is that it's all about when they're spending money abroad, is what they like about the real-time updates and how much things are actually costing them, and conversion rates and all those fees associated with that.
Absolutely.
What I was actually going to ask is, companies like Amazon or Facebook or Apple are kind of making noise about potentially moving into banking, and they're already like a household name, as it were. So they might have some trust associated with them potentially from things that they've done in the past. Do you find that concerning, or have you spoken about it? Or
oh yes, loads of people are waiting for Amazon Bank or Google Bank to come along, or Facebook Bank or what have you.
Yeah.
So every time this is talked about, I ask this question: who remembers Napster? Do you remember Napster?
Yeah.
So Napster, for those of you who don't remember, was a piece of software that was file sharing software that was around back in the late 90s, early noughties. This really dates people who can remember Napster, by the way, because it dates them to, sort of people my age. What Napster allowed you to do was you had a folder on your PC, because this was in the days before smartphones, and you pointed Napster at that folder and you said, download, you said anything in this folder can be downloaded by anyone who also has Napster. And that sort of thing. And so it was for file sharing. And what it was used for in those days was sharing music, because videos initially were too big to share because the internet wasn't fast enough. This is going to get back to your question, I promise. But so these file sharing went along, and obviously when the music industry found out about this, they went mad, and they said, this is completely beyond the pale. This is completely illegal. You're violating copyright. You're selling our property without having the permission to do so, et cetera, et cetera. And so they obviously took Napster to court. And in court, Napster was pulled up, and they came up with this fascinating defense line. And their line of defense was this. They said, you can come into the Napster's offices and you can search our servers. Because again, this was in the days before cloud, so they had physical servers in their offices. You can search our servers. You will not find any music files on them. There is no music on our servers. We are not selling your music. We are not, pushing your music around. We are merely a file sharing service. We are merely a network. That is all we are, a network. We do not involve ourselves with the selling of music at all. Now, obviously, the judge in this regard took a very dim view of that argument, and Napster was, forced to stop what they were doing and that sort of thing. And all of these free file sharing services got shut down. But the Napster defense, that defense of we are not a music company, we are merely a network, a file sharing service, exploded in popularity and is now used by pretty much all of the big tech firms. So Facebook and Twitter, whenever people come a knocking and saying, you're sharing fake news, shut this down, they go, well, we are not a news site. We are not sharing news. We are merely a network of people. We are merely a social network of people allowing to share things. Uber will say, well, we are not a cab company. We merely connect people who want rides with people who are prepared to, provide them. Airbnb, we are not a hotel chain. We are merely a group of people who provide connections between people who want to stay somewhere and people who have houses available, and so on and so on. So this idea of people saying we are not this industry, so you can't regulate us like this industry. We are merely a other thing. Is prevalent across the entire place. So I am sure that companies like Facebook and Google and Amazon and so on would love to get their hands on financial data and people's banking data. That would be a goldmine for them.
Yeah.
But if they became an actual bank, they would have to become regulated. They would have to step in and follow huge reams of regulation wherever they became a bank. And they don't want that. They don't want to provide those banking services. So they may well provide the connections, they may well provide the network, but they don't actually want to follow the regulation because that would tie them into huge costs that they don't want to pay.
Yeah.
So I don't think that you will actually see Amazon Bank or Google Bank or Facebook Bank for quite some time because they don't want to step in and follow the regulation.
Makes sense.
So we're going to shift lastly to kind of the future of Starling Bank. But before we do, right afterwards, we're going to jump into Q&A. So everyone in the audience, please prepare any questions that you have. You're welcome to type them into the chat or raise your hand and we'll call on you afterwards too. So just a little heads up. I wanted to circle back to something that you said earlier about, making sure that you're doing the right thing at the right time or like the right thing now, I believe was your phrasing. And I'm just reading this book, I'm blanking on the title, but it's talking about Deutsche Bank and a lot of their problems, shall we say.
Sure.
But what was interesting is that their kind of company logic was the exact same thing actually, and saying everything that they were doing was very now focused, and because of that it was all hyper focused on short-term growth, and it really didn't incentivize the proper R&D needed to have technology such as yours, which is why their infrastructure even right now is like mind-blowingly behind where it should be.
Sure.
But how do you make sure that like philosophy of being now focused doesn't, or like how does that play into like the long-term version, and you making sure that you're planning for the future?
Okay, so I think the key thing here is to be relentlessly focused on, is to be committed very much to solving a problem, but to be rampantly pragmatic about the solution. So earlier I was talking about solutions. When you come up with solutions, you need to be rampantly pragmatic. You need to ask yourself, what are we doing now? But you need to have a committed long-term problem to solve, which in our case is making banking better, helping people live healthy financial lives, and so on. The problem I think Deutsche Bank experienced is that the problem that they were focused on was, how do we make the next quarter's profits go up? That was the problem that they were focused on. And so all of their rampant pragmatic, no matter how much rampant pragmatism they had, it was all focused on all of the solutions were, how do we make profits go up now? And generally long-term investment in infrastructure isn't one of those things. Whereas with us, because we're focused on this let's make banking better idea, what you then get is you then get people coming along and go, well, maybe what we need to make banking better is to put money into our infrastructure to upgrade our code so that it can deal with higher volumes and so on. So we will have periods where we go, the best thing we can do right now is to not release new features and just sit there and improve the way that we interact with our database so that we can handle 10 million customers rather than 1 million customers, and so on. So that's the sort of thing that we will do and ask ourselves. So I think it's the combination of being rampantly pragmatic about your solutions and have a good goal to focus on that you are committed to in the long term.
Okay, that ties into my next question. Like, where do you see Starling Bank in the next 5 to 10 years?
Sure. So I see us growing quite a lot, and hopefully becoming more of a household name, and becoming more recognized as this isn't just an add-on, but actually this is my main bank now. Like people actually putting their current account, their savings into Starling Bank, and us, offering more and more features and connecting with more and more other financial institutions. One thing we haven't talked about, hadn't had time to talk about, is the connections that we've got to all other, different providers of mortgages, insurance, and so on that we provide through the marketplace. And I think the other thing we do, I hope, is to be really recognised as the company that shook up business banking and forced banking for small and medium enterprises, forced the minimum viable thing that you can do in that respect to be way higher than it is right now. And you really have to provide essentially an automated banking system to even be considered a competitor in that market. I really hope that, because that will take off a huge amount of burden from small and medium enterprises if they don't have to employ people to trawl through the data and move data out from one place to another, which they do at the moment.
I have several other questions, but I'm aware that we're already 10 minutes into what's meant to be the audience Q&A session, and I want to be mindful of the attendees. So should we turn it over to the audience?
Yeah, well, so I'm going to stop recording now, which means that any questions that are asked and your responses, Jason, are not going to be recorded.
Okay.